What's up, everybody? August 13th, 2021, 7:44 a.m. I'm gonna just go over where gold is now and continue on from the analysis yesterday, build on what I think is going to keep doing that moving forward. So, yesterday, as you recall, I was in this buy order. If you've seen the previous video, you've seen I'm in this. I was in this long order. I held on, knowing that there was major news coming up. I could have closed, in pretty decent profit. At one point, I was up about 65 pips, but I was targeting this this next level of structure up here. So about 100 pips, what I was looking for. But nonetheless, I held through the news, and lo and behold, the news wicked down, stopped me out. I got stopped out here, but obviously it went past that. But as the market shows, you never really know what's going to happen. So, I got wicked out, and then the price did continue back in my direction. So, basically, my error from a trading perspective was I should have just, adjusted my stop. But same time, it would start to make the trade not make sense from a risk to reward standpoint because, already, I mean, where I had it, as you can see, one moment here. I was at a 1 to 2 risk to reward. I was risking 53 pips to make 106 pips. So, adjusting that down, I mean, and all these wicks, at one time they were not wicks, they were just big bearish candles. So, you never really know how far this thing is going to drop. And that's the whole reason for the stop loss, which is that, if it broke below this level, I was pretty sure that it was going to go down to the next level of structure, which was this level, which it almost did on this next following candle. But, by that point, it was already, I would have literally had to have had my stop loss around here somewhere. So it would have been a 1-to-1 risk to reward ratio, which me personally, I don't do that because it just doesn't make sense. I mean, for every one trade that you win and you held through all that drawdown, you're going to have 2 or 3 that you're going to lose, and then instantly you're negative. So for me personally, I have to stick to at least a 1-to-2 risk to reward ratio. If I'm not targeting that, I don't see something that makes sense that I could achieve that possibly, I'm not even going to try to get involved with the trade. It doesn't make sense. So nonetheless, I got stopped out. But, as you can see, price has been creeping back. Basically it would have hit my TP, that area, about 6:45 an hour ago, roughly. So, overall, my analysis was correct in the sense that it was a bullish, kind of a bullish bullish movement here in the last couple of days. But, obviously news wicked me out. So, hey, as part of the game, it happens. Losses happen, and then you just got to move on. So, I got obviously here. One second. Seeing that exhaustion form and everything, I saw prices pushing back up. Last night, I entered another trade, which is going to be my last trade for the week. I'm just going to, take a break, today and just analyze the markets and be back on the chart Sunday night to start getting into trades, when opportunity presents itself. But I, saw what I thought was a nice head and shoulders pattern forming here. I took, this was a high risk trade. I didn't really wait for many confirmations. I just saw here, this is the H1. And I drew this counter trend line because, interestingly enough, we are in a counter trend because clearly when you still zoom out on the daily time frames, we're still in a bearish, bearish market, definitely. I mean, price really, to be honest, has to break above at least this level here, the 1784, to really start looking for heavy buys. Like the whole outlook of the market is now starting to turn back bullish. It's still bearish, definitely. I mean, it's still very much so bearish. It's starting to hit now this previous level of support that is now resistance, which is at 1760, roughly 1762. But seeing this bearish move, I drew this counter trend line here. Now, drawing this counter trend line, you see that it is respecting it. So what do I think is going to happen next based off of all this? I thought when I entered this quick trade last night, it was Asian session, so it was 18 o'clock, around 6 o'clock, 7 o'clock, something like that. I got into the trade. I thought that I saw here you know, it was right here, head and shoulders forming, you know, the shoulder, the head, and the other shoulder. So I said, okay, I'm going to get into this trade. I did a just very, very small risk, 23 pips only is what I was willing to risk, $2.34 or $2.39 on actual price. Risk that, and if I knew if it broke above this level, actually I got in right here. Yeah, I keep, when I get close to this, it pops up with the stats of the entry or the position. So let me stick over here. But I got in at this shoulder, basically, you can imagine. So right around here, right here in this candle. Actually, let me zoom in a little bit more. On the M15, I think it was right around here somewhere. This engulfing that when I click over it, the risk to reward ratio pops right perfectly in the way. But that engulfing, if you can see where my line on my cursor is, that's where I got in, basically. A little around there. I mean, that's where the entry is, but I'd have to check MT4 to see exactly what it was. But it was either up here or in here. Like, so this little range, 1752 to 1753, somewhere in there, I got in. And my thought was, I'm gonna, you know, catch this at the top of the shoulder and write it down. And then my projection was then, this was on the H1, actually seeing the pattern mostly form. As you can see here, I mean, you see the left shoulder, you see the head, and then, you know, what I thought was the right shoulder forming. And the next area that would have dropped down to, I thought would have been either here, 1731 or 1724, but obviously that didn't happen. Price kept going up, but that's why I set my stop. So I set my entry right here. I set my stop just slightly above the wicks here of the left shoulder. You know, just knowing that if it breaks above that, no longer is it a head and shoulder formation, possibly. So, you know, I don't need to be in the trade anymore. So that's it. I closed out, took another 23 pip loss, keep it moving. And, you know, as you can see, since then, price has, it's been, you know, moving kind of sideways, but it is definitely still moving up, and it has broken above this previous level of resistance here at the 1756. So at this point, I think gold looks like it's starting to get into some buys, short-term buys at the very least, as long as it respects this trend line and it continues to break these levels of support. I do think that it is, you know, going to be starting to be more buy opportunities that we're going to be looking at. Now, with that in mind, one moment here. So with that in mind, the next major level of resistance that we're going to look to break is this, which was my previous target area. Actually, it was still my same original target area, just I got stopped out again with the news. But anyways, so this level here, once it breaks above this 1762, I think it's going to continue up until about 1799. I mean, there's nothing really majorly holding it back. I mean, that's a pretty nice big jump. So me personally, I think is one of two things. I mean, obviously there's only one of two things, either going to go up or going to go down, right? So one of two things, either A, it's going to reject this, you know, it's going to reject this and it's going to come down. How much it'll come down, we'll see. But I mean, even if it rejects this and comes down to this previous level here, I mean, let's just say in that example, roughly, you're talking about a nice little 100 pips. So, you know, if it rejects and jumps down, comes back to this level here, nice little 100 pip move potentially. If it breaks above this level, if it breaks above this 1762, I am going to be looking for buys, and I'm going to be waiting, really ideally waiting for it to push up, come back, retest, and then continue pushing up. But yeah, we'll definitely see what happens. But that's my analysis. You know, I think we're starting to look more into buy opportunities here. I don't think sell opportunities will be such a great idea right now at this current moment, just based off of current structure and where we are. News, I'm not sure I don't think we have any major news today. No, it's nothing too major. No, nothing. Just, you know, so Michigan reports, things of that nature. Nothing like too major. So yeah, I mean, that's basically what I think. You know, now, of course, I mean, there's always short-term opportunities. I'm just looking at the bigger picture, but you know, I mean, you see exhaustion forming on these M15s. I mean, you know, you could try to make a little move anywhere in here. You know, risk 10 pips, try to make 35 pips. But you know, I don't think that's as going to be as high probability of a move. I think you know, based off of this, unless it breaks through this trend line here, unless it really breaks through this trend line here, then, you know, maybe I'll also start looking at. But there's other things that come into play, because even if it just breaks below this trend line here, you know, it's still really to show that the sellers are now in control, it would have to break below this trend line, break below this level here, and start to be around here somewhere. Break below here, and then really get to like here. That's the first real test. And then if it breaks below that, then maybe we're in a different conversation at that point. But it's kind of too early to tell. I think really it would be better wait and see if it tries to break this trend line, has some exhaustion, and then push back up, and then you just get into a buy and ride the trend. So that might be something that I might do. Keep an eye on. I mean, get in on something like this here, and then continue to ride the wave back up. Because as far as I can see, it is still respecting this this bullish counter trend is still intact. And you see here on the daily, nice, pretty strong bullish daily candle pushing back up. I mean, if we want to see where we are, even on a retracement perspective, let's see. Let's take out the Fibonacci really quick. Fibonacci retracement. So, and yes, everybody draws their fibs differently, but I'm going to draw it. Let's see. And then this was that flash crash that happened. So, let me see. All right, the real start of the move, let's say around here. I'll say there, because I'm not going to take into account the flash crash. So, from what I'm seeing here, it's breaking above the 38.2. So, if it's breaking above the 38.2, I think it's going to continue going up to at least about the 61.8. And the 61.8, let me see. Yeah, but I don't think that is a correct placement for the fib, because on the H4, with H4 you really can't see as much detail. So let's try to set the fib again. That doesn't make a lot of sense. Okay, so let's see. I would say the real beginning of the downtrend move is like around here, really. Not really. Really, I'll say it's like here, actually. And then we're talking about the flash crash. So, if we do it that way, it's coming out as a 61.8, but still breaking above the 61.8. So, yeah, I don't know. I'm not sure if the fib can be really that, because of that flash crash, that push down. I'm not sure how much that can really be accurately projected like that. Let me see. Let me try one other thing. I mean, we do it from a daily just to get a little bit of perspective. Not that this is going to be 100% 100% accurate or 100% what we're dealing with. But let's see. So we do it that way. Yeah, it's breaking above the 50, but yeah, I don't know about the fibs here in this particular scenario because of that flash crash, the way that big wick down. I mean, not sure, but to me, I see bearish. I mean, I see bearish still. I mean, we're in a bullish counter trend, but I still see overall on the big picture bearish. But again, zooming in, still bullish, and I see on the smaller time frames, respecting that trend line. So I think, right now at this point, we're going to be starting to look for bullish opportunities. Keep an eye on it. Wait for a little pullback here, some exhaustion forming like right here, maybe even, get in here, something like that. So with that, guys, good luck. I hope this analysis breakdown maybe helped you get some money today. So go out there and do good. Happy trading.